Get started. I am recording this class on my laptop, so I can post this on YouTube for people to watch at a later date. Just let everybody know. But again, sorry about my health challenges at the beginning of the semester. Unfortunately, I can't promise it won't happen again, but as much as possible. First live class. Our next one will hopefully be on Monday. Okay. But today, what we're going to do is we're going to talk about homework 2, set up homework 3 in your first 2 group projects. But the first group project that we are starting today is the Bloomberg Trading Challenge. Okay? This Bloomberg Trading Challenge is worth 10% of your semester grade. Thank you for filling out the Google form yesterday, identifying who your team captains, kind of lead traders are for the trading challenge. Those individuals have been registered in Bloomberg and have access to the trading challenge right now. They will be the only ones who have access on behalf of your team, and they will be trading on behalf of your team. Okay, so it's very important you get a team grade for the trading challenge. So even though they're the person that you've selected to trade on behalf of your team, all members of the team had to participate in the selection and evaluation and monitoring of the stocks. Okay, they're just trading on your team's behalf. All right, for every group project we do this semester, there are 5, right, which is 50% of your grade. Each group project is 10% of your grade. You will do a peer review, okay, on the level of effort of the members of your team. If 2 or more members say that you did not participate in any of the group projects, I will give you a 0 for the project. You will not be able to opt out of the final exam. That'd be a huge penalty to the score. For some reason, last semester, 4 students chose not to think that I would do that, and they failed the class with a capital F because they all lost half their grade for non-participation in team projects. Okay, so just very, very important. Make sure you participate. Make sure you show up for team meetings. Make sure you know who your team members are. If you have to do something, work it out with them, because you do not want them saying in the peer reviews that you didn't participate. Or you did partial participation, I'll still reduce your grade. All it takes is 2 team members or more on your team to say that, and I will change your grade, because I can't monitor you in the actual teams, but you're going to do that for all the projects. So just as a capital F in this class, it's very important that you participate in these team projects, right? Half your grade is team projects, right? So the second part, just FYI, since I'm talking about it, that I'm just kind of hard about is I also had to send a couple of students to the Honor Council for plagiarism last semester, all right? Now, they did idiot plagiarism where they literally turned in the same paper, okay? Now, that's really bad. It's hard to get around explaining that one, all right? So what I'm also saying is just in any of these projects, any of these assignments, be careful about your copying and pasting, okay? If you don't do it with a citation, like it's really easy for you to get an XF and not be able to graduate, okay? And I don't care how much your parents paid for you to come to the school and complain to me about, woe is my child, that they had a bad time. The university takes it very seriously. So that's why we talk about you have to use a lot of real sources in this class. Just make sure you source them. Put a bibliography in, put a footnote in. Just don't use other people's information. And don't use another student's paper, particularly from another semester, and then turn that in. Like that's the stuff that's really easy to catch, because every one of your papers goes through a system called Turnitin. And it's really good at catching basically when people copy each other's stuff, including on the assignment that you're submitting in real time. Because as soon as your assignment is submitted, it goes to the Turnitin database. And so if you submitted an hour later, somebody else submits it, it's going to check it against that last paper that was submitted an hour before. Okay? I just don't want to see that happen, so I'm just kind of warning everybody in advance. So let's talk about the Bloomberg Trading Challenge. It's going to be worth 10% of your semester grade. It's going to be broken into 2 halves of the semester. First half of the semester is 5% of your semester grade. Second half of the semester is 5% of your semester grade. You start out with $1 million. You're going to trade for the next 5.5 weeks. Basically, the team that has the highest portfolio value gets 5 points. The team with the lowest portfolio value gets 1 point. Everybody else in between. There are 6 teams you're competing against in this section. So the grading distribution will be 5, 4, 4, 3, 2, 1. on the assignment based on relative performance. That's assuming participation. Okay? We will then reset it. You'll go back to $1 million, wipe the slate clean. You'll have a second half of the semester. So if you're hopelessly behind, there's still hope for you in the second half of the semester. We can reset. Okay? So for those of you that have been registered through the Google form, if you go into Bloomberg, okay, there's two ways to access the trading challenge. You can either type in IDEA, IDEA, or you can type in TMSG. Okay, those are the short codes to get to the trading challenge. Now, unless you're registered, you won't be able to do anything when you're there. So Bloomberg actually created the trading challenge across universities. Right? So it's actually set up that people across different schools could participate in this little game and get prizes and stuff like that. There's one going on right now. Because we are such a big licensed user of Bloomberg, they've given us a privilege where they're allowing me to create our own private trading challenges within classes. Okay, so that's what we're doing here. We've been doing that for the last several years. So when you go, your team captain goes to this area, there's a drop down here called Launch. Every time you have to click on the drop down to select your section. Now you will only see one section of the trading challenge, but you still have to select it to get to your team. Okay, so in this case, and help me with what section is this? Yeah, the university is completely screwed up with these numbers. But anyways, because like the last section was like 201. That's the 8 a.m. section. Anyways, so you're 301? Okay, so 301. So you'll click 301 Fall 22 1H. Okay, so that will be your section. Now you won't actually see anything on here until people start buying stocks. So once you start buying stocks, your team and the other teams will start showing up on this list. Right? But I, under networks, created a network with the 6 people that were submitted. So these were the team captains. You submitted this Google form. I've already registered them. They could go there right now to actually start trading. The $1 million is in the portfolio. Now, to understand the rules of the competition, if you go over here to settings and click on rules, these are the rules that I set up. Okay? First of all, it's an equity trading competition, which means you're just trading stocks. All right? Bloomberg has the ability, because it's a real platform, to trade anything, bonds, commodities, crypto, whatever, but I have limited it to just equities. Right? I've also disabled option trading, so you're only going to basically buy equities / ETFs. You can go long or you can go short. That's it. Okay? I've also eliminated day trading. Okay? Because some people get addicted to the trading challenge, and I need you to do the work in other classes. So anything that you buy today, you can't sell until the next business day. Anything that you short today, you can short a stock, you can't cover until the next business day. Also, it's during business hours, right? So if I were to buy a stock at 8 a.m., it won't fill the trade until the market opens, all right? If I buy or try and sell a stock Friday at 5 p.m., it won't actually sell it until Monday, okay? So again, market hours for the actual trading, 1 business day holding period, okay? Cost basis is what's called next tick. I've also disabled limit trading, which means you're buying at whatever the price is, the market price, and you're selling at whatever the market price is, right? So again, part of the reason is I want you guys to participate and pay attention. That's why whoever you've assigned as your team captain is very important. Because if your team captain, let's say your company's in free fall and you want to sell it, if they don't go in and sell it, nothing will change. Like it's going to be whatever that price is when they finally get around to it. If they don't get around to getting to the lab to buy the stocks, you won't own the stock. Okay? So they have to go in, they have to buy, they have to sell. Everybody at the team can help them, but they're the ones that are actually doing the trading. So these people have great responsibility because you're going to get a group grade based on that trading. Also, if your team captain goes rogue and decides to trade a bunch of stuff without consulting with the team, I can't stop that either. Okay? And if they lose all your money and you're in last place, then it's going to penalize the entire team's grade. Okay? Now you have to work that out with your team. So again, you have as your captain great responsibility here to basically trade on behalf of your team. And when you trade, you're making market orders. Okay? Now, few years ago, what I used to do at the end of the semester is used to make students write a paper explaining the rationale for every trade. They hated it, I hated grading it, so we stopped doing it. So your cost of trading is every time you buy or sell a stock, you have to put in a 50-character explanation, okay? It's 1/3 of a tweet. So you don't have to write it at the end, but you got to kind of write it as you go along. So that's the minimum trading cost to you on buying and selling stocks. Selling a stock in Bloomberg is called closing a position. Okay? It's just their language. So you close out the trade to sell the stock, right? I have disabled auto closing, which means you can't set a limit price that says if it hits this price, sell it, right? If you want to sell the stock, you have to go in, hit sell the stock, close it out yourself, okay? Next, investment levels. So pretty much you can buy just about anything, except since you have $1 million, I put a minimum investment of $10,000, all right? You shouldn't be investing like $200 in, GameStop. Like that's not this isn't the Robinhood crowd, all right? So you got $1 million, put at least $10,000 in every stock, all right? And the other thing is you can't put more than 20% of your portfolio into any one company, okay? So you can't just say, here's $1 million, I'm gonna put it all in Google, all right? You gotta spread it out across multiple companies, right? 20% maximum per company or per portfolio. Now, if you buy a stock and you put 20% in and the stock goes up, it won't make you liquidate it, but then you just couldn't add to that position for that same stock, right? Now, security restrictions, you can pretty much sell, short, or go long anywhere in the world, all right? So if Bloomberg has that ticker and you type it in, it'll tell you can't buy it, but generally I didn't disable any market. So let's say you're a specialist in China or Japan or UK. You can actually buy those local stocks. All right, you can go to the Hong Kong Stock Exchange, buy the Chinese company that you want to invest in. All right, you don't have to just invest in American stocks. All right, you go anywhere in the world for your investments. All right, same thing if you want to short somebody. All right, now, security restrictions, I also allow you to do ETFs. I consider an ETF a stock. All right, so you want to go to a triple levered ETF, have at it, okay? But nonetheless, you can go stocks or you can go ETFs. Now, the minimum market cap of the stock that you're buying has to be $500 million. A number of years ago, a student watched The Wolf of Wall Street and got intrigued by trading penny stocks. So I had to put a minimum value on the stocks that you could invest in because that's not the point of this class, right? We're working usually with bigger, more well-known equities. We're not dealing with the shady startups, okay? 500 million market cap. If the stock drops below 500 million, you could sell it, but you can't buy it back until it gets above 500 million, okay? Or pre-market biotechs. That's another one that they were trying to get to. All right, also $3 minimum share price. You can't buy anything for less than $3 a share. Again, if your stock goes below $3 a share, you can sell it, but you couldn't buy it back, right? Same thing. If it's below 3, you can't short it either, right? Cover it. It's got to be at least $3 when you make the transaction. Now, period restrictions are 1 day. I put in a 1-day holding period to eliminate day trading. As I said earlier, if you buy it today, you can sell it or cover it or short it today. You can sell it or cover it next business day, okay? So Bloomberg is actually using the real world bids and asks to cover your trades. So let's say that you put in a $200,000 order for a lot of shares of a very thinly traded company. If the shares don't exist in the real world, it won't complete the transaction, okay? So it actually has to find the real shares. Now, it doesn't trade cash, but it will basically say, aha, here's a block of shares I will buy based on that block, okay? So it doesn't just say, here's the latest tick, execute the trade, right? So if you buy a big block of stock, it might have to go a couple levels up to find that many shares to complete your trades, which is also why the trading on Bloomberg is not instantaneous, all right? It might take a few minutes before the trades are actually complete. So for those impatient out there, it's like, why didn't my trade complete immediately? It might take 10 or 15 minutes to complete, or it might not complete at all. Same thing. If you buy a thinly traded stock and you go to sell it, there's no buyers out there, you won't be able to close the trade. You'll be stuck with that stock. Now, if you're buying Ford or Procter & Gamble, this is not going to be an issue, all right? But if you go to the smaller stocks and smaller exchanges, it's happened to students in the past. They're like, why can't I sell my stock? And it's because there's no market for it, right? So, one other thing, commissions. Institutional pricing, 1 penny per share. You buy 10,000 shares, it costs you $100, right? So that's not going to probably affect anybody's portfolio, but nonetheless, we've implemented institutional pricing, which is a penny a share. Okay, that's your commissions on the trades, right? So those are the rules. If you click on summary, you can also see a summary of everything I've chosen as the basic rules for the trading competition, with a couple more that I'll get to in just a second. Okay, now I'm going to just pick a different semester where I've wiped out the students, and I had previously bought some stocks. Now I don't really count, just for examples, in a previous semester. So when you start buying stocks, this is what's going to start looking on your screen. You'll start showing up here. And as your peers buy stocks, they're going to be here too. The one difference, though, is when your peers buy stocks, I'm an admin, I can see everything transparently. You won't be able to see the stocks of what your peers bought. You'll just be able to see their portfolio values, but you can't drill down to see their actual stocks. You can drill down to see your stocks, but you can't see your peer stocks, okay? The way you're going to be scored is this column right here, portfolio value. Right now, everybody's $1 million, okay? And that's what's going to be scored at the end of the first half of the semester trading competition. And just going to be ranked from highest to lowest, dollar value. Okay? So that's the scoring column. You have to go and buy a minimum of 10 longs in each half of the semester. Okay, so you got to trade. If you don't buy 10 longs, your team will be disqualified. Okay? Final important rule. Available cash. Everybody today starts with $1 million. Starting Monday, you can't be above $300,000 of available cash at any point for the rest of the competition. This is a trading competition. You can't just say, gee, the market's going down, I'm going to stay in cash. That then defeats the academic purpose of the exercise. The point of a trading competition is you must trade. I don't care how bad or miserable the market gets, start selling short. Like buy ETFs that go in the, against the market, but you have to trade. Minimum 10 longs, okay? The number of longs will start showing up here. I only did 2, but in this section they had originally done 190, okay? So again, whether you do 10 or 50, as long as you meet that 10 threshold, that's okay. Shorts don't count, okay? And again, back to cash, you can't go above 300,000. So if I own a bunch of Microsoft, and I want to sell it, that same day, buy something else. Sell $200,000 worth of Microsoft, buy $200,000 of Apple, or whatever you want to buy, right? So that way you're not stuck with a lot of cash. So if I ever see your available cash, I'll give you one warning, and after that warning, I'll disqualify your group, okay? Again, got to trade. Now, back to this, click on me. When you buy stocks, click on your name, this is where they'll show up, right? Very important, you're going to ask, how do I sell a stock? When you get to your list of stocks, after you buy them, this circle red X, it's called closing an idea. This is how you sell the stock. You literally click on it, pop-up menu, close idea, stocks will be sold. Okay, that's Bloomberg's parlance for sell the stock. Now, one other key thing, when you sell a stock, you sell all of it. All right, so if I bought 200,000 of Microsoft, I can't say sell half of it. If I want to get on my Microsoft position, I'm selling all of it. If you think you want to buy a stock and not get out of all of it, sell it and then buy half of it back immediately. Or buy 2 slugs of Microsoft, 100,000 each, and then sell one at a later date. All right, but nonetheless, if you sell something, you have to sell the whole position. Okay? Now, when you actually make your trade, up here in the left, it says compose. This is where you actually make your trade. Okay? Pop-up screen. Go long, own the stock, go short. Those are your two options. Whatever ticker symbol you were on will be loaded here, Microsoft. This is the current share price of Microsoft that you'd be buying or selling it at. Okay? Importance, target price, horizon date, meaningless. Don't worry about it. Okay? Down here, you will only be registered for one network. Because I've been an administrator and I've done a lot of different tournaments, I can go to a lot of different networks to buy and sell. You will only have one, yours. Okay? It will be down here. For me, it's fall 22, 1H, first half, same as in the drop down. We said what? This is section 201? 301. 301. So let's say I do want to buy Microsoft, okay? Or if I type in another company, say I want to buy Apple. Choose the ticker. It'll give you their current price. Over here, where it says next tick, it's grayed out because you can't do a limit order. It's doing a market order. Then where it says investment, you got $1 million of funds available. Put in the dollar amount that you want to buy. Okay? Don't worry about the shares. Bloomberg will figure out the shares. Put in the dollar amount. So let's say I want to buy 250,000. I can actually type 250K for short if I'm lazy and I don't want to put in 3 zeros. So I'm going to buy $250,000 worth of Microsoft. Then I go to the top of the screen. I hit send to submit my trade. If I trip up any rules, it won't execute the trade. It'll tell you which rules you tripped up. I tripped up 2 rules. First, I can't put more than 20% of my portfolio in any one stock. 250 is 25% of $1 million. Okay, so I can't buy that much Microsoft. Number 2, I didn't put my 50-character explanation. Okay, or so for Apple, sorry. So cancel out. I'll switch this to 100,000. I'll come down here, bottom, which is where I write my explanation. And I'll just say buying Apple due to high expected demand for iPhone 14, even in tough market. Okay, and then I hit send, and it will submit my trade. Okay, and then once the trade's done, the market opens, it will eventually show it up here. Okay. Questions about any of that? That's the trade challenge. So again, whoever's a captain can go in there. I'll start talking to your team, figure out a trading strategy. They're the only ones that have access to this area. But nonetheless, I'll tell you 2 things you can do. Okay? 1, this is more advanced, but your captain can come up here to actions and export all the stuff you did, for example, to a file. Okay? So if you want to give a report to your team, you could like email them an Excel file or a PDF. Also, what you could do, and you probably saw this in your training, is you can go to W up at the top, which is worksheet. You can create a new worksheet, choose a template, like let's say I'm going to do equity buy side, create, and then I can start putting in the companies that I bought in the trading challenge. Okay, so I bought earlier today, I just bought Apple, let's spell it right. I bought Apple, and then I bought, what did I buy in the first class? Google, Class A shares. So those were the 2 stocks I bought, my examples in the last class and this one, right? And so what I could do is I could then share this worksheet, put in the Bloomberg accounts of the teammates, and that way we could all be looking at a shared worksheet of our portfolio. since they can't access the competition, they can at least create a worksheet. You can put in like the prices that you originally paid, and it'll track it just like the trading competition if you want. You don't have to do that. I'm just letting you know that's an additional option you could do. Okay? All right, questions about the trading challenge? Okay. The other assignment that's going to be due on Friday is the Bloomberg certification, okay, BMC. So coming back here, remember you had to complete these 4 modules, which have the blue ribbons. You want to take a screenshot that has all 4 of these. You might just shrink it down. And when you complete the module, it'll put right next to this the percentage that you got right or wrong in each of the areas. And again, each of these have to have at least 70%. All right, so a screenshot that shows higher than 70% of these 4. That's what you submit by Friday at midnight for your certification, 5 points. All right, it's all or nothing. If you're missing any of them, any less than 70, didn't finish all the modules, you don't get partial credit. So it's either 5 or 0. All right? Questions about BMC? Problems with BMC? Okay, great. So let's talk about homework 2. So for homework 2, was on Qualcomm. And what I asked you to do is an EIC on Qualcomm using BIC's best fit algorithm for the whole firm. So basically, if I come here to Bloomberg, as I do the E, Qualcomm, start here, then I do RV, markets, and then beta, using best fit algo, this is the screenshot that I would take. Okay? Now, to take a screenshot, again up here, take screenshot, save it, overwrite the one I did earlier, replace. Okay, now here's the other point. If I take a screenshot, down here at the bottom of the screenshot is the serial number. Because we got some questions about, I don't see the serial number on my screenshot. So if you just go into Bloomberg and take a screenshot, there's no serial number. If you export the image, on the exported image, there will be a serial number. That's how you get to the serial number. All right? The reason why I want the serial numbers is I believe in this class, you have to do the work. I don't want you to do the screenshot and then give it to a bunch of other lazy people and then you do all the work for them. That's not the point of this class. All right? Everybody should be doing the terminal stuff yourself. It's actually going to help you. In fact, you want to work on Wall Street, go work for any bank. First 2 weeks of your job, you're going to be thrown Bloomberg training. All right? You will have a leg up in your interview process by going through this process. Right, because you're going to be able to sound far more intelligent than competing students at Georgetown and other universities who have no access to Bloomberg. Okay, so number one, it will help you personally, but number two, I do require it because I want to make sure that you are the ones doing the work. So back to the screenshots, this is what we mean. I'm going to tell the TAs for the first couple assignments, we're not going to enforce this, but later in the semester, we're going to start enforcing this. All right, and again, the reason is I want to make sure that you are actually submitting and doing the work. Right? You can't have somebody else come because you don't want to get to the lab. So back to this. That's my screenshot. That's what I would submit. Okay. Now, back to the economy. Bloomberg. All right. So how would we answer the E in the EIC at a minimum based on the screen? What did you say? Yes, sir.
We would compare the raw beta of Qualcomm to the average of the entire industry, the raw beta. So compare 1.16 to 1.43 in this case.
Okay. And what do those two numbers tell you? What does the 1.43 tell you?
So relative to the economic factors, the
So this is a very economically sensitive industry at 1.43. Okay. What can we say about Qualcomm's 1.16?
It's also sensitive, but not to the same degree as the average of the industry.
Great. So two things are very important. First, use numbers. Gotta use numbers in your answers. If you don't use numbers, you won't get credit. Again, two reasons. One, if you just say industry is economically sensitive, well, that's 50-50. All right? I don't know whether you're right or wrong. You could have just guessed. You could be looking at the wrong number and guessed right. Okay? So if you don't use numbers, I don't know what you're looking at. By using numbers, I know exactly what you're looking at, and it helps with the grading. Number two, beyond this class, it makes you better in the real world. All right, I just finished an 18-month gig as a CFO for a $21 billion company called Blue Shield of California. I was a CFO for a $400 million subsidiary. Decided to take some time off and do that during COVID. It wasn't actually time off. But the point is, I can tell you, in the corporate world, people that use numbers in presentations sound a lot more intelligent, because the problem is you're sitting there at the senior level meeting or any other meeting, and you're talking and you're looking at the numbers, and nobody with all these numbers on the screen knows what you're talking about, because you know what you're talking about, but they don't, because they can't follow you. There's a lot of numbers on the screen. So it's good practice for this class. It'll be better practice for the real world. You will sound more intelligent. You'll be better as an analyst for doing this. I know you're going to find it to be a pain in the ass, and the first time you get a 0 in a homework assignment for forgetting to use numbers, you're going to get really pissed off, but you'll be better for it. That which does not kill you can only make you stronger. All right? So, back to this. What else can we say about the E? That's the minimum. Okay? But in a week and a half, you're going to do a 10-minute group presentation on Dentsu, and I would expect that if you got 8 people working on Dentsu for the next 2 weeks, you can say more than read a chart. Why is this industry economically sensitive? What's the context behind the 1.43? What did you say, or what could you say? Yeah.
I guess right now, currently in the economic environment, it would depend on like the supply chain shortages, which is why the 1.43 seems like higher.
So the supply chain shortages, which suggests the supply chain is very important, boom and bust cycles there, makes the industry more sensitive. That's an important insight. Thank you for sharing that one. Yeah. Oh, go ahead. I see.
Oh, yeah.
Yep.
Well, these companies just can't get the materials that they need for their semiconductors.
Okay. So this, again, the shortages are affecting, making them more economically sensitive in the downtime. But there's also just inflation. Does inflation affect this industry? I know you probably talked about it in 5 forces, but does inflation affect this industry? How does it affect the semiconductor industry? Yeah.
Well, since semiconductors are used in a lot of technologies, tech stocks are inflated, that's going to also affect the semiconductor industry.
Okay. Now, if you did the Qualcomm industry and read the BICO, you found out that they were really in 2 major markets. There's kind of like the cloud business, and then there's the applications and hardware business, like phones and stuff like that. And so the point is, if you think about semiconductors for personal devices, whether it's games or computers, etc., what happens in right now, as we're in tough economic times with high inflation? What are consumers doing with their devices, tech games and stuff like that? Yeah.
They're not buying them.
They're not buying them nearly as much, right? So that's back to the economy. Because in the tough economy, the consumer is actually buying a little less, which is another reason why this industry starts to go through some boom and bust cycles, right? The cloud business has been a booming and has been staying booming, but the consumer business growth is starting to slow. Well, that affects the semiconductor industry over time. That makes it a little bit more cyclical than a business that it doesn't matter what the economic times are, consumers will buy the same amount of stuff. So that's why it's a 1.43, right? Why is Qualcomm a little less economically sensitive than its peers? Yeah.
The benefits of economies of scale.
to some degree, economies of scale where?
I mean, I feel like it should have been, it's a more established company.
But what are they established in? What makes them less economically sensitive than their peers, than the average semiconductor player? Yeah.
They're a little bit more diversified.
So they have some diversification, which tends to benefit them. What else helps insulate Qualcomm from some of the cyclicality of the industry, but not all? Their beta is still 1.16. Yeah.
They work a lot with like wireless and like 5G, so like people need that.
Those tend to be, more consistent sellers even in the tougher economic times. And what else is true about their wireless portfolio? It's kind of a hint coming from the C part of the EIC. Qualcomm is pretty much the chip leader when it comes to wireless chips, and they got a lot of patents around those. So that tends to insulate them from the competition even in these economic times because they're kind of the only game in town for many of these chips. So the point is Qualcomm is a little less sensitive than the rest of the market because of their diversified portfolio, but more importantly because their portfolio is in an area where they're so strong that they tend to be a little less sensitive than the other firms to changes in the markets. So the point of the story here is I do not want you to be going through 443 and just be a plug and chugger, right? Anybody can crunch numbers. Anybody can read data. Okay, so you can read. Do you know what it means? Can you give me some context around it? That's what I want you guys to be doing this semester. That's why you have access to all these real world tools. That's what's going to make you better, right? That's what's going to give you a differentiator in the job market. It's going to help you in the real world with your careers. Because a lot of people know how to calculate formulas, and you're like, well, do you know what you calculated? They're just looking at you. Like, I don't know what that number means. I just know that that's what the equation says. Like, I don't want you to do that here. I want you to go beyond. Now, some of you are going to have a lot of angst because, like, I don't know a lot about these companies. Well, that's the point. You got an amazing tool in front of you that gives you, at your fingertips, a wealth of information about these companies and industries. Use it. Don't plagiarize, but use it to learn. And you're going to learn a lot about companies, a lot about industries. But give me context. Just don't give me data. Data is the minimum, okay? And this assignment, if you just did the data, you're like, oh my God, am I going to get a 0? Not for this assignment, but in future assignments, I'm going to expect more, including homework 3, okay? And what you probably did in homework 2, because we're going to kind of repeat it for a different company, right? Now, questions about the E? All right, let's move on to the I. The I is the industry, right? A lot of people get confused that Michael Porter, who did 5 forces, if you do an I, it's not about Qualcomm. The I is about Qualcomm's industry. So when you talk about the I, you're talking about semiconductors. When you talk about Qualcomm, that's the C, that's the company analysis. Okay, we want to differentiate between the two. Because a lot of people are like, I'm going to do a 5 forces on Qualcomm. Let's do Qualcomm supplier power. No, it's the semiconductor industry supplier power, buyer power, that we really should be talking about. Qualcomm just happens to be in that industry. That's the differentiation between the I and the C. Okay? Now, when we do the I, the first thing we're going to have to do is we're going to have to go back to RV, we're going to have to go to custom, and we're going to have to submit a screenshot.
Make your computer easier to use. Windows will read and scan this data automatically. Press the space bar to select the highlighted option.
I like to make my computer easier to use. There we go.
Text on screen allowed.
Okay. Is that like the accessibility option?
On screen. Type without the keyboard.
Okay. Yeah, just do you need that? Whoever's computer's doing that? Can you just turn it off? That's okay. Just leave it unplugged for now. All right, so back to the screenshot. Is this an attractive industry? What tells you that this is an attractive industry? What are you looking at? Yeah.
Spread. So return on invested capital is a lot higher than its weighted average cost of capital.
And he's exactly right, but he would still get no credit on the assignment. Because what did you forget to say?
I don't know.
The
Well-
return on invested capital is approximately like 14% greater than the weighted average cost of capital.
Got to use numbers. So just get in the habit. 24.61 is a lot higher than 10.39. That's why it's an attractive industry. So you have the right idea. I actually know what you're looking at, but I can't give you credit for it until you say it. So that's why I'm going to be a hard ass. Yes.
I have a question on like the comp source. I have like the PICS benefit out there, but I don't have whole firm right next to it. And I think, yeah.
That's weird.
And I don't really know how to get it, but I think it did kind of affect like the market.
Oh yeah. If you use a different comp source, you're going to get a different rate of return.
Yeah. So I didn't realize how like if that would affect it when I turned my thing in. So yeah. I
Okay.
just don't know how to get whole firm right after
Let's look at that at the end of the class and see what's showing on your terminal. But yes, if you use different comp source, you get different companies. Different companies will give you a different industry average. All right. So back to this. We know that this is an attractive industry. Does Qualcomm demonstrate competitive advantage? Yes or no, and why? Does Qualcomm demonstrate competitive advantage?
Yes.
Because?
Because a 47% return on invested capital is higher than the industry's average of 24%. And
Well,
and it's lower,
sort of. It's the spread, it's not just the ROIC.
and a lower weighted average cost of capital.
Yeah.
9%.
So it's the 47 minus the 9 is much greater than the 25 minus the 10.
Yeah.
Okay, that's really what's important there. Higher relative spread. Okay, that's what we're going to address when we get to the competitive advantage. But back to 5 forces. The point of the first part of the 5 forces is to explain today's spread. Why is this industry having an ROIC of almost 25% and a WACC of 10? What about the 5 forces explains that? So what forces did you say help the industry spread? Where's the context for that? Yep.
The low bargaining power of buyers.
Okay. So elaborate.
Every company that needs semiconductors, they don't want to switch the company that they're working with because of the high switching costs. And like every tech device is going to need some kind of semiconductor.
All right. So I think you're hinting at 2 things. So one is there's a big supply demand imbalance right now, particularly since COVID, where everybody bought a bunch of electronics when we were working at home, and suddenly demand surged and supply didn't catch up. So basically, that meant who had the power in the relationship? The customers who wanted all the chips, or the chip makers who didn't have enough chips to give it to them? Okay? So that hurt the buyer power, right? Because basically, the buyers didn't have as much power because they needed the chips and they were going to pay a premium for it. Okay? The other thing he mentioned is switching costs. So if you have a Qualcomm modem, as an example, and Apple's been trying to kick Qualcomm out of the iPhone for years and had almost no success in doing it, right? Then basically, it's hard to switch from a Qualcomm modem in your phone to another modem for many reasons, including Qualcomm's patents. So certain chips, you can't just say, I'm going to go to generic commodity chips. Some are commodity, some are not commodity, and that tends to help the industry if they're not a pure commodity, right? So those 2 things that he mentioned tend to give a more favorable spread, probably help explain this. What else explains the high spread? Yes?
I talked about how the semiconductor industry has less firepower, especially regarding right now because of the coronavirus pandemic, and then due to like the CHIPS Act, which was recently passed in July of 2022, it provides an income tax credit for semiconductor equipment and manufacturing facility investment through 2026.
So which of the 5 forces is the CHIPS Act impacting?
I said supplier power.
Okay. I think the CHIP Act could also do another force beyond supplier power. So are you familiar with the CHIPS Act? I think we're basically investing like $50 or $60 billion to get a bunch of semiconductor makers to build plants in the U.S. What Intel's spending, $40 billion in Ohio. I think TSMC or TMSC, Taiwan Semiconductor, is building a bunch of stuff in Arizona. So these foundries are really expensive, right? Tens of billions of dollars to build. That would lead to what force? What force helps the industry if you got to spend tens of billions of dollars to build one of these things? Yeah.
High barriers to entry.
There's high barriers to entry. That also tends to favor the industry because it's not like you can be a venture-backed startup and like go make the next chip. Okay, so there's a scale that's now required in this industry to compete. That tends to help the players in the industry. However, we think about 5 years out. How does the CHIPS Act, affect barriers to entry? I saw you pointing at the ground.
Yeah, it would lower it, obviously, just because it would make it more enticing to pursue that long-term.
Yeah, so it's not like we, University of Maryland College Park students, could go get a bunch of government money to do the next chip, but the governments are kind of subsidizing some of the chip manufacturers, in a way lowering their barriers to entry to adding more capacity. So in a way, that actually might hurt the industry over time, because we're going to probably see much more capacity added to this industry, because some of the barriers to building these foundries are coming down. If capital's more readily available, right? But back to today, barriers high, prices, margins very high. Okay, so buyers today don't have a lot of power, right? Rivalry is driven primarily in the short term by supply and demand. And right now there's a huge demand and not a lot of supply, so there's no reason to cut price. Like if they got a chip, they can sell it, right? And they're selling it at a pretty high premium. So that's the other reason the industry is doing well. The barriers to entry are fairly high, so it's harder in the short term to take advantage of the situation. And when we think about substitutes, they're not as easy to substitute, because if you have an advanced chip, you can't just take an older technology semiconductor, replace it with a more advanced chip, right? Automobile companies have been facing that problem, which is why they're having some problems selling new cars, because the chips they need are very specialized, and if you don't have that specialized chip, it's not that easy to just swap it out for something else, okay? What about supplier power? The suppliers of the semiconductor industry. Who has the power in that relationship? So let me give you a different example. So work with a company called Stanley Black & Decker. They make tools, okay? If you go to SPLC, this is the supply chain of any company. You know this from your Bloomberg certification. On the right are Stanley Black & Decker's customers. On the left are Stanley Black & Decker suppliers, okay? Now, I'm using them as a proxy for the tool business, because we're still at the industry level, but here's the general idea. Notice this. Stanley Black & Decker's two biggest customers are Home Depot and Lowe's. Home Depot represents 15% of Stanley Black & Decker sales. Lowe's represents 15% of Stanley Black & Decker sales. Those two companies are 1/3 of their business. If you're going to buy a tool, that's where you're probably going to buy it through, okay? From a Home Depot standpoint, Stanley Black & Decker represents 2.3% of Home Depot's cost of goods sold. Who do you think has power in that relationship? Home Depot or Stanley Black & Decker? Who's got the hand? Yeah, absolutely. Because if Stanley Black & Decker says, I'm going to take my business someplace else, Home Depot's like, okay, lose 1/3 of your sales and go find somebody else to sell these tools through. So that's the point. Home Depot and Lowe's basically dictate the terms to Stanley Black & Decker, right, and the other tool companies, because none of the tool companies have huge amounts of impact to Home Depot or Lowe's. Walmart does the same thing, and therefore they tend to have lower margins because of it. Okay, so let's go back to the chip makers. Is that happening here? Right? if I go to Qualcomm as an example, and I do their SPLC, and I start looking at their suppliers on the left, who do I see on this list? Taiwan Semiconductor, Teradyne, Global Foundries, KLA, ASE, Amkor, JSET, Keysight Tech, United Microelectronics, LG, Inotech. What do some of those companies do? Taiwan Semiconductors, which, by the way, Qualcomm represents 10% of their revenue. Taiwan Semiconductors is 41% of Qualcomm's cost of goods sold. What does that tell you? Is Qualcomm making their own chips? No, they're outsourcing a lot of the manufacturing of the chips. So that's the other thing. In the chip industry, semiconductor industry, you have people that do like the design and the patents, like even Apple, and you got somebody else that actually makes it. Okay? So when you think about who's making those chips, what's the power in that relationship? Okay? Does that affect the industry margins? Right? Right now, it appears that those margins are relatively low because historically the semiconductor players have treated it more like a commodity. Right? But nonetheless, if we're in a chip shortage world and Taiwan Semiconductor starts prioritizing who they make chips for, that could start affecting this industry. It doesn't appear to be hurting this industry now, but that's affecting it. In fact, another thing, if we go back to the E part of the section, China's zero COVID policy could start affecting economically the industry, right? Because if China's shutting down entire cities and manufacturing supply chain, trying to root out COVID, that could, in the short term, cut supply chain and make supply a little bit more scarce for somebody who's relying on these chips in order to go to sell products, right? It's one of the reasons why Apple this year, with their iPhone 14, basically has the exact same chip as the iPhone 13 in their lower end models for the first time ever. And they're not just doing it to save cost, it's because they can't produce enough high-end chips to sell it to the masses. So what they're doing is they're selling last year's chip because that's what they can get access to with the supply chain. So again, these supply chain issues matter, and who has supply power in this relationship could affect an industry. Now, in the semiconductor industry, the suppliers don't seem to be hurting the overall returns of this industry, okay? Because either the people that are outsourcing aren't exhibiting a lot of power right now, or the actual raw materials right now have not been severely disrupted. But that's the next piece. If your raw materials get disrupted in the supply chain, that could be an issue. And right now it hasn't been. So these are the types of things that I want you to address. And a question came up in the last class. Somebody said, look, do I have to talk about every force in the analysis? And the answer is yes. All right? And the reason I'm saying yes is because if you talk about every force, you're going to start thinking about things you might not have thought about for a company, and it's not going to be just a cookie cutter answer. But the other side of it is not every force has equal weight. And eventually you might say, you know what, for this industry, suppliers don't have a lot of power and move on. Okay? So you don't have to spend an equal amount of time on every force, but you at least have to address them when you do your answers. All right, questions about Qualcomm, industry, semiconductors, those 5 forces today? What you should be saying in your write-ups. There's a reason why I asked for 500 words. All right, what about 5 years from now? Is this industry, anything going to change about those 5 forces? Is anything going to change about that industry spread in 5 years? What'd you guys say? Yep.
I said there's high levels of competition within the industry already, so just over 5 years as more companies kind of continue to enter, the spread would be likely to decrease.
Okay, so if you read the industry report, and again, BICO, really good source of information to do the analysis that we're doing, just don't plagiarize, source. But the point is, over here on the left is the industry report. So BICO is the company report, and then BI is the industry report. There's a great industry report on semiconductors. What Bloomberg is doing is they're hiring ex-sell-side analysts to write these reports. So these people are specialists in these industry that worked on Wall Street for a while, kind of know what investors would want to know about these industries. So very useful information, right? One of the things they're already saying in the recent BI for semiconductors is demand is already starting to catch up with supply. Or sorry, supply is already starting to catch up with demand, okay? And that the chip shortages are not shortages anymore, right? And that will probably start to affect a few of the forces. Now, I don't know if it's exactly 5 years from now, but I can tell you in the intermediate term, there's going to be more supply. And that's going to definitely impact the spread in a negative way, right? Because you're not going to see as much of an imbalance, and you're going to see more competition, right? That's the other part of the CHIPS Act. Because basically, because the governments are subsidizing some of these foundries, including the U.S. government, we're going to add a bunch of capacity and essentially increase competition in the industry. And that is going to put some pressure on the returns of some of these companies that are otherwise were the only game in town, right? And by the way, China's not sitting idly by. They want to build a huge amount of capacity too. So there's a lot of capacity coming into this marketplace. Matter of fact, it reminds me that I'm just old now. I graduated in '90, and one of my first jobs in the early '90s as an analyst, I remember working at Union Carbide, and I was in a room with a very senior person, and I was like, can you help me understand the chemical industry? He's like, it's real simple. For the last 40 years, we've been an 8-2 business. We have 2 good years, followed by 8 bad years. And then we just repeat that cycle every decade. I was like, well, why do you do that? And he said, because during the 2 good years, everybody builds chemical plants. And they all come online at the same time, and it sends us into a death spiral for 8 years until we can work off the excess capacity, prices go up, everybody builds, and then we do it again. Well, that's the semiconductor industry. That's exactly what's happening in semiconductors right now, is that margins are high, huge amount of capacity was built, it's going to come online the next year or so, we're then going to be awash in supply, it's going to put pressure on this business. So I actually think buyer power is going to get better for the buyers, worse for the industry. I think that the barriers to entry because of all this is starting to come down at a high level with the government subsidizing capital available to this business. I think that to some degree substitutes become more viable because there are lots of semiconductors. And what a lot of automobile makers and others have figured out is I need to be more generic in the types of chips I put in my cars so that if one chip supplier can't supply it, I have alternatives because that's what they've been doing for new cars for the last 18 months. And so I think substitutes have become more viable. And as a result, this industry will be less profitable going forward. Not saying it's not going to have a higher spread, but I think it will be lower. Now, you may disagree with me. That's okay. Just got to give me context on explaining it. Because even if you look at Qualcomm, and you go to A&R, you will see that the sell-side analysts that are covering Qualcomm don't all say, buy Qualcomm. There's 27 buys and 12 holds. Like, even in the real world, there's disagreement on the future of the business and the industry. And that's the point. But you got to at least give some rationale for whatever you're backing it on with some data and some context. That's what I want you to practice as you're writing these papers and doing these assignments. Also, if you read the book, you saw the idea of regression to the mean. Okay? All industries tend to regress to the cost of capital with ROIC over time. All industries see growth slow down over time. So it's not a question of if, it's just a question of when. So the point is, if I see an industry with an extraordinarily high spread, the likelihood that that's going to continue for a long time is not very high, right? So it suggests that this industry is just going to get tougher, and I've given you some reasons of why I think it's actually going to get tougher. So my view is, in 5 years, it's going to still be a positive spread, but not nearly as positive as today for reasons that we just talked about. Your view might be something different, but that's what you would have had to address in your paper. Questions? C. We showed that Qualcomm has a higher spread than the industry. They have competitive advantage. Why? Why does Qualcomm have competitive advantage? What allows them, C, to earn that higher spread? Back to our screenshot. What'd you say? Now we're talking about Qualcomm. Why is Qualcomm doing so well? Yeah. They're really strong with their patent portfolio, particularly around wireless modems. What else? Yeah.
High levels of research and development investments.
So they have both unique technology and patented technology that differentiates them in the marketplace. And they're very dominant in some of those segments. That's giving them the highest growth. Now, they're also less sensitive to the consumer part of the business that's slowing down. They're not as sensitive to the game part of the market. They're more sensitive to cell phones. And right now, people are still buying phones. Right? Matter of fact, there's a big upgrade cycle with the Apple. And Apple, even though they're trying to throw out, if you buy an iPhone, you're going to have a Qualcomm modem in it come Friday. And that Qualcomm modem makes Qualcomm a lot of money. Okay? So here's the point. Qualcomm doing really well for those reasons. Is that going to change in 5 years? Are they going to be as dominant with their spread? You're starting to shake your head. Why do you think not?
Well, regression to the mean to start. They're getting there.
But what would cause, I think I agree with you, but what would start to cause the regression of the mean will be a scenario.
We'll get back like before, when more people are going to come into the industry, so competition would take away its money.
Competition one. Matter of fact, I just said one that I actually believe, which is Apple. Apple is stubbornly trying to throw Qualcomm out of their iPhone. And Apple's got the resources to be that stubborn. Like, they're going to eventually figure out how to spend the money to get those chips to work. And at that point, Qualcomm's not going to make as much money when they're selling to the other phone competitors. So basically, I actually think you're right, that they're going to lose some of their competitive position. They're still really good at modems, but nonetheless, they're probably not going to be the only game in town, and the other competitors are starting to try to copy them. So again, will they have a spread better than the industry? Probably. Will it be as high as spread? Not. And that's my opinion. You might have it to have a different opinion, but you got to have an opinion. You can't just read and regurgitate numbers. All right, questions about EIC? All right, real quick, a couple years ago, we did an assignment in this class on a company called CVS. Very familiar with CVS? You probably shop there a lot. Okay. So here's the point. This is CVS's BIC's whole firm spread and their competitors. Okay. Industry is making an average of 12%, 11.9%. ROIC against a 7.81 WAC. CVS has a 6.7% ROIC against a 7 WAC. All right, that's CVS. However, this is whole firm. If you click on the whole firm dropdown, you'll see that CVS is in 3 businesses. One of their businesses is called food and drug stores. You go to CVS, you buy your milk, your other sundries, 20,000 products at a store, buy whatever you want. Walgreens, whatever their competitors. Second business, CVS owns Aetna, one of the biggest health insurance companies in the United States. It's a completely different business than people that sell you milk. Their third business is they're in the healthcare supply chain business. They're a PBM, which means they're the big middleman between the insurers and companies that are basically selling you prescription drugs. Okay, so they're one of the big prescription drug benefit managers. Right, that's a completely different business. So the point is, look at the ROIC, just to keep it simple, and then the WAC. But then I'm going to switch this to food and drug. 11.98 is the average across all the firms on that list, but if I just switch to food and drug store competitors, the ROIC falls to 6%, and the WAC is still around 7%, but the ROIC is 6%. That business is not nearly as attractive. Matter of fact, that's back to CVS's strategy. CVS is not making money selling you like a grocery store. They're trying to turn their CVSs into healthcare centers, minute clinics, etc., get your services, pay for your insurance, sell you prescriptions, do everything. That's where they see their future. But the point is, they still own this business. It's still big, but it's relatively low returning. Okay. Now, if I do look at my Aetna business, I switch here, I go to managed care. Second thing you'll notice is not only is the returns higher, the average ROIC of the managed care business right now, based on these peers, is 11.7% against an 8% WAC, but it's much higher. This is much more attractive to the food and drug business. And the competitors are different, right? Versus if I go to healthcare supply chain, third segment of their business, you'll notice that the average ROIC is 9%. And CVS doesn't change because they're in all three businesses. But the competitor peer set changes and the returns change. Okay, so I got one industry earning, was it 10 or 11 ROIC? This one's earning 9 and the other one's earning 6, right? Those are the three industries that they're in. Not all of them have equal attractiveness. Not all of them have the same 5 forces. So if I'm doing an analysis on CVS, how many industries do I have to analyze? 3. I have to do an economic analysis because the RV betas are going to be different for each one of those segments. The RV spreads are going to be different for everyone's segments. The 5 forces are different. The economic analysis is different. It's a much more complicated write-up. So I'm letting you know that's assignment 2. Okay? Your assignment 2 is going to get more complex because I'm giving you for homework 3. Is that homework 3?
Yes.
Homework 3. Let's do Monday. It's going to be on Microsoft. Okay? So MSFT is the company. But here's the point. When you go to Microsoft, BIX is the comp source, the algorithm. BIX stands for Bloomberg Investor Classification Service. This is whole firm for Microsoft. When you switch this to infrastructure, application software, 2 different industries, 2 different groups of competitors, 2 different spreads. Okay? So you're going to have to analyze both industries, which means 4 screenshots. 2 RV markets betas, 1 for infrastructure, 1 for application software. 2 industry spreads, 1 for infrastructure, 1 for application software, explaining the 5 forces today and in future for both, and the competitive advantage Microsoft has against each of the groups today and in the future for both. All right, so it's a little bit more complicated assignment than the first one. All right, just be aware. Back to minimum 500 words. This one you're really going to need the 500 words in order to do this. All right, now, first presentation of a group project is a week from Monday. Okay, it's coming up pretty quick. That's an EIC, 10% of your grade. It's going to be a group project. You'll work on it collaboratively. You make a 10-minute PowerPoint presentation for a grade. You won't turn in paper, but you got to explain the entire EIC of the company in 10 minutes. The company for the group project is called Dentsu. Dentsu. You heard of Dentsu before? Dentsu is one of the 5 madmen, remember that TV show, of the world. They're one of the 5 biggest advertising agencies, traditional ad agencies. They do it all, from the creative to the marketing to the distribution to the online to the social media, one-stop shop. So if you're Procter & Gamble and you want to advertise Tide worldwide, you go to a company like Dentsu, and they got brands all over the world. All right, these are the 5 big agencies. Right, they're about almost $10 billion a year in sales. Okay, it's a big ad agency. Right, that's going to be the company that you're going to do your group project EIC on. Okay, now when you click on Dentsu, you're going to see that they're in 3 businesses. They're in the ad agency business, advertising and marketing. They're in the IT services business. Think, I want to advertise online in the cloud, follow me ads on websites and stuff like that. And they're in an application software business because they create software to manage all this stuff and to create all the ads. Okay? So 3 businesses. So that means you're going to have to go through 6 screenshots in 10 minutes covering all of this, which is going to be complicated. Now here's the thing. You're in teams of 7 or 8. I fully expect all your teams to work on this together, and you're going to have a tight presentation to make sure you get it all done. That's a week from Monday, just letting you know it's coming up. So you know who your teams are. You should be talking to them. You should be working with them. You now know this assignment. So BMC trading started as of today. Hopefully you make your trades, talk to your teams about that. I'd start collaborating with your team on the Dentsu project. It's going to be here before you know it. And individually, Microsoft is due on Monday. BMC certification due Friday. Okay, a lot of stuff this week. All right, as we wrap up, any questions about any of this? All right, good luck. See everybody on Monday.
There's another class coming in at 11, right?
Yes, there is.